Hi guys, welcome back to my YouTube channel. My name is Clarice and I'm a second year student doctor, and in today's video I just wanted to talk about a few things. So this is me trying to study, and I am currently pregnant with my second baby, so I'm basically combining studies and pregnancy and motherhood and all the other stuff that come with it. The journey hasn't been so easy, but slowly we are getting to the finishing line. In this video, I was 33 weeks pregnant, so I'm hoping that everything goes well and the baby can come out happy and safe. So yes, that's what's been going on really. So like I said, in this video right here, I was at the university trying to study in between my lectures. I think I had like a morning lecture like 9 o'clock, and it finished around 11, and I was meant to have something else around 1 o'clock. So I was just trying to kill time. I find that it's very difficult for me to study at the university on campus, because with this pregnancy, I honestly fall asleep any given time. I just feel sleepy. I read like one sentence and I'm just sleepy. But when I'm at home, I try to entertain myself, make a cup of tea, and find things to distract me. So studying on campus, definitely it's not for me, especially in this condition. But I try to use my time wisely, because I have upcoming exams, and that's like in a month's time. And coincidentally, that's the same period I'm due to have this baby. So I don't know how that's going to work, but I have to keep studying and I have to keep pushing, and hopefully things will work out in their perfect way. But yeah, so in today's video, I just wanted to talk to you about what we spoke about last week about investing. So as you know, I'm a student now. I'm a student mom, and I don't have time to work. So I've been investing in the stock market for a few years now, and I just wanted to talk about it, to talk about, how I started, and just see, how it might be beneficial to people like myself or anyone else. Like, investment and building wealth, honestly, it's something that everybody should thrive to achieve. And I want one day to teach all these things to my kids. So I'll just do a quick recap and show you a few things that I use or that I look into when I'm investing. So this is the first tool that I think that it's quite beneficial, especially for beginners. It's an investment calculator. So basically what this does is shows you what you can achieve with your investments, however, or depending on what particular point you start. So there is obviously a starting amount, and there is return rate. So you can put a percentage of the return you're expecting to achieve. So it's quite beneficial, and I'll just show you like a few examples, just a few numbers you can play around with. It's, the currency is in dollars, but obviously you can apply that to pounds or whatever currency that you use. But it's a really good tool, and it's just straightforward basically. And I would encourage you to just use it, just so that it can make things a bit realistic for you. So if we take, for instance, a starting amount of £1,000 or dollars, we are all students. Like, I'm talking about myself, like as a student. It's not like I have a big sum of money to start with. And let's say my course is 5 years, and the return rate on average on the stock market, if you want to be safe, is about 10%, I would say. This is, when you're investing in real solid assets that are unlikely to fluctuate in price. So this is very protective, especially if you're not going to be actively monitoring it. So if we say 10%, I like to be more conservative with the numbers. So 10% return annually. And then you can just, say maybe you have a part-time job and maybe on a monthly basis, you can afford to put in, let's say, at the end of each month, maybe £100. And that would just accumulate along the 5 years that you're planning to invest. So as you can see, your end balance after 5 years is quite good, to be honest. I think what I mostly look into is the interest that you have accumulated, because you don't have to work for that money. That money accumulates as you contribute to the investment account. Now, this is very good because you're unlikely to get this from the banks. You're lucky to get 0.05 of a return rate, because they always try to squeeze the people, and inflation eats the value of your money. So this is a very good way of preserving your money, keeping your money, saving it, and at the same time protecting your money from inflation. So as you can see, it's very useful. Like I was saying, the average interest rate in the UK is very small. So the ones that I'm showing you right now, they're actually not the ones that apply on accounts, on bank accounts. So maybe if you're lucky, you can get a good return on your ISA, which is a whole other conversation. But the majority of time, you hardly get even 2%. You hardly get that. So it's a good option to invest than just keep your money sitting in the bank, because you're literally losing out on a great deal of opportunity to get more than you would have put in. So remember when I just said that 10% is very conservative? This is the kind of funds you should be investing in too, like especially if you're a beginner, just so you can preserve your money. You need to keep your money safe, and you need to grow it and multiply your money, but at the same time protect your money. So this is something that will be beneficial to start with, because it creates and it builds your foundation. So obviously, as you can see, the past 5 years, if you had invested in this, it's a good return. You do get good return. Obviously, it's unlikely to be exactly those numbers because the price fluctuates. You might buy it at the top, you might buy it at the bottom, but at the end of the day, you are dollar costing averaging. So basically, you accumulate the average as you invest, because you can never predict the top and you cannot predict the bottom. Now, if you're more comfortable into taking bigger risks, these are the type of companies that you might look into. So like this one is called Nvidia. So these ones are individual companies. So as a student, in this era, we're using AI, and Nvidia is one of those companies that have revolutionized AI, and it's definitely not going away. So as you can see, the return within 5 years is ridiculous, but I don't want you to think that that's how it is all the time, because you're unlikely to get it at the bottom and ride it all the way to that percentage. It's unlikely that it's going to happen like that. You normally get you start finding it out when it's already run up. But at the end of the day, you're investing on the long-term basis, so you're likely to still gain substantial amount of money because it's a solid company that has a future. If you don't see AI moving away, then it's definitely worth investing in it. So that's all that I wanted to show you today. I just wanted to show you this calculator because it just makes things realistic. It's not selling your dream. It's just something that you can use for your own benefit. I hope you found that helpful and useful. Please don't forget to like, subscribe, and share. And thank you so much for watching. And I will see you next week. Bye.